So you got two people, both with the same credit limit. One builds wealth, the other one goes into debt. But what's the difference? There's gonna be these 5 mindset shifts that I'm gonna discuss with you during this video. Make sure you stay tuned until the end because I'm gonna give you a bonus tip that most of the wealthy people never ever talk about. Coming in at number 5 is gonna be assets over liabilities. Broke people use credit to go on vacation, buy designer, kick it, or purchase vehicles that they know they can't afford. On the other hand, rich people use credit in order to purchase assets, things that are going to actually bring in revenue, like rental property, inventory for their business, or equipment that's going to produce income for their business. One of my clients used $25,000 worth of business credit in order to purchase commercial landscaping equipment. 4 months later, the $25,000 was paid off. Now everything after that is all profit. You can take somebody that has a broke mindset and give them $25,000. They're gonna put $10,000 on a car. They're probably gonna go on vacation, and they're probably gonna buy some designer clothes. So again, the most important thing when it comes down to becoming wealthy using business credit is gonna be your mindset. So buying the right things is gonna be key. But without this next step, you're gonna be weakening your credit report instead of building it. Number 4, separate your personal credit from your business credit. So here's what broke people do. Broke people, when they start a business, they use their personal credit cards in order to pay for business expenses. The problem with that is you're going to be maxing out your credit cards, which causes your utilization to go up and is going to drop your credit score. So when you're applying for business credit, the lender is going to look at your personal credit. And if your credit cards are maxed out, you are not going to get approved for that business credit card. So one of the advantages of using business credit is you can max it out without it hurting your personal credit score. So let's just say it's $25,000 on this American Express card. If I max this card out today, that $25,000 will not impact my personal credit by any means because this is a business card. So another reason that you want to make sure that you keep the two separate is for accounting purposes. If you have your business and personal expenses mixed together, when you go apply for a loan, the banker's not going to be able to tell what's personal expenses, what's business expenses. So we want to make sure we keep the two separate so we can know our business budget and our personal budget. All right, so number 3, use free money, not credit cards that have interest. What a lot of broke people do is they apply for credit cards that don't have 0% interest. So whenever they do get the card and they run up their business expenses, they're immediately paying interest on all of that debt. And most of the time, they're going to carry that debt month over month. And over a span of a year, you're probably racking up thousands of dollars in interest payments that you could really be using to invest in your business. But instead, you're giving the banks extra money. I want you to start executing like the rich do. In our credit line hybrid program, we help you stack 0% interest credit cards that allow you to invest in your business without paying interest for 6 to 18 months. I've helped startup businesses get $70,000 in business credit, launch marketing campaigns, double their revenue, and then pay off the credit cards without having to pay $1 in interest. So just remember, free money is powerful, but none of that can help you if you don't know how to manage your cash flow. Number 2, you're going to control your cash flow instead of panicking. I see a lot of new entrepreneurs make this mistake. When their business is struggling financially, they're going to be pulling from their personal savings or using personal credit cards in order to help them sustain during these rough times. Then they drain their personal savings and then they start missing credit card payments, which is going to kill their business credit score and their personal score, and then they're stressed out. What I advise my clients to do is utilize business lines of credit to help you bridge the gap. The great thing with a business line of credit is you only pay interest on the amount that you borrow. So when your business income is slow, you can utilize a business line of credit in order to pay for inventory or help you with payroll until things start picking back up. So staying calm with credit, that's going to keep you alive. But in order to thrive, you have to climb higher. So the number 1 mindset shift is going to be climbing the credit ladder. A lot of new entrepreneurs, once they get a couple credit cards, then they get stopped. But rich people, they see the vision. They treat credit cards like a ladder. First, they start with small vendor accounts, add business credit cards, then lines of credit, and finally, they go for those larger loans. So to keep it short and sweet, in order to build your business credit, you need to do a couple of things. So you need to get accounts with vendors that report to the Business Credit Bureau. You need to make sure that you're paying those accounts not on time, but pay them off early. Keep your utilization low, diversify your credit mix, As always, make sure that you keep your personal credit score at least 700 or higher. So when it comes down to those larger loans, a lot of lenders like to see a profitable organization, and having a strong personal credit profile is going to help you get those six-figure loans. So here's the bonus tip. One well-built business credit profile can open up the doors to so many different opportunities. Wealthy business owners don't stop with one company. They leverage their strong business credit profile from their first business in order to do joint ventures, purchase real estate, invest into other business, or finance passive income projects. So let's recap. Number 5, assets over liability. 4, separate personal and business credit. Number 3, use free money, not high interest debt. Number 2, control cash flow instead of panicking. Number 1, climb the funding ladder. And the bonus, use credit to expand into multiple income streams. There's multiple ways for you to get funding. If you got a 680 credit score or higher, we can go one route. If you have bad credit, but your business is producing $10,000 a month or more, we can go that route as well. We have over 30 different lending programs. So you just got to make sure that you click the link. So your next move is to watch the video that's next on this playlist. Other than that, I'm Martin, the Credit Doctor, and I'll see y'all on the next one.